This is Curiosity Verse, and this is your money briefing for July 17 to 24, 2026. A handful of stories this week moved the markets, and quietly, your wallet. We'll take each one in turn, the number behind it, and the part most headlines skip, what it actually means for you. Let's get into it. Alphabet reported second quarter 2026 revenue of $119.8 billion, up 24% year-over-year and ahead of the $116.93 billion analysts expected, with diluted EPS of $9.11. Google Cloud revenue jumped 82% to $24.8 billion as cloud operating income nearly tripled to $8.8 billion. Alongside the results, Alphabet raised its 2026 capital expenditure guidance to as much as $205 billion, most of it for AI data center build-out. Alphabet's spending guidance is now one of the biggest single data points investors use to gauge how much of the AI boom is real revenue versus a spending arms race. The stock fell 3.65% after hours as the market weighed rising Capex against near-term profit. Tesla's second quarter revenue rose 26% year-over-year to $28.24 billion, beating the $25.71 billion analysts expected on record deliveries of 126 vehicles. But adjusted earnings per share came in at just $0.33, far below the roughly $0.51 Wall Street forecast, as operating margin narrowed to 1.4% and capital expenditures jumped 142% to $5.79 billion. It's the clearest sign yet that Tesla is trading near-term profit for AI and robotics infrastructure. Spending shares fell nearly 3% after hours as investors questioned how long that trade-off can continue. The European Central Bank's Governing Council left its deposit rate unchanged at 2.25% on July 23, following a quarter-point hike in June that was meant to offset rising oil costs tied to renewed Middle East conflict. President Christine Lagarde said the full inflationary impact of the energy shock has yet to play out, and that the bank is deciding meeting by meeting. Markets are now pricing real odds of another ECB hike in September, a preview of how central banks everywhere are being forced to react to volatile energy prices, not just jobs and growth data. Initial claims for U.S. unemployment benefits fell by 22,000 to a seasonally adjusted 187,000 in the week ended July 18, the fewest since September 1969, far below the 212,000 economists polled by Reuters had forecast. It's the strongest single read yet that the labor market isn't cracking, which gives the Fed less cover to cut rates and keeps upward pressure on borrowing costs for everyone. Freddie Mac's primary mortgage market survey put the average 30-year fixed mortgage rate at 6.58% for the week ending July 23, up from 6.55% the week before and the highest reading in a month, as Treasury yields drifted higher on hawkish Fed signals. Every tenth of a point adds real dollars to a monthly payment. This is the number that decides whether the housing market thaws or stays frozen for buyers sitting on the sidelines. The Dow rose 385 points, plus 0.74% to 52,224.64. The S&P 500 gained 0.89% to 7,509.20, and the Nasdaq climbed 1.29% to 25,837.21 on July 21. Powered by chip makers and a strong start to earnings season, about 88% of the roughly 66 S&P 500 companies that had reported were topping profit estimates. Micron jumped 12% on memory chip demand, and Supermicro Computer surged over 15% after flagging a record order backlog above $60 billion. An 88% beat rate this early in the season is unusually strong. It tells you corporate profits, not just AI hype, are still doing real work to hold these valuations up. That's your week in money. The through line, as always, these aren't separate events, they're one connected system, and it moves every single week. If this made the week make more sense, subscribe to Curiosity Verse, a new deep dive every 2 weeks and this briefing every Friday. We'll see you next week. This briefing was built entirely from reporting and data published this week by the outlets on screen. Every figure is dated and verifiable.